Whenever this concept of FOMO, which we call fear of missing out, happens to you, you are not so far from someone who is gambling. And please, I'm not here to castigate you because it happened to me sometimes ago. It used to happen to me as well, where I just feel like, I may miss out of this stock, and I jump into it. And eventually, maybe at that point in time, it was not a momentum ride. I was just buying high, and at that point in time, I just see the stock dipping. So if this has happened to you in the past, or is still happening to you, the question is, how do you come out of it? Because it may make you to be losing money. Take it from someone who has made this mistake severally. I hope you understand. So that's why I said, I'm not here to castigate you, but to help us see what it does to us, especially the aspect of having to involve our emotion in it. Because the moment you do not have a particular plan, you did not have a strategy or a plan, or you did not do your analysis, even if it is basic analysis that you usually do before you jump into any stock, and you do not do it, and you only enter because there is a trend or there is a market hype or maybe social media hype, and you jump into that stock, at the end, by the time that stock starts dipping, your emotion gets involved. You start blaming yourself. Why did I enter this stock? Why did I buy this stock? Why didn't I have an entry plan or an exit plan for this stock? And eventually, there's nothing you can do, and you'll be praying for a rebound. And that's why we want to look at the topic FOMO, fear of missing out. A major reason why investors lose money in the stock market, whether in the US stock market or in the Nigerian stock market or whatever stock market it is. So the first question is, what is FOMO? And this does not even happen only in the stock market. It happens to people generally. But now I want us to apply it to investment in the stock market. Fear of missing out is a psychological situation. It is a psychological situation where an investor feels compelled to invest in a particular stock or stocks, even if it is not part of your plan, simply because the fear of losing out on a potential opportunity. The major reason why you quickly jumped on that ride is you don't want to miss out on that opportunity. You see it as an opportunity. Maybe there's a social media hype. Maybe an influencer came on YouTube and say it is better you enter into this stock now. And eventually, some people even borrow money to invest in such stocks, which is not supposed to be. So the question is, how does this thing manifest? How does it come to us that you have seen yourself do it over and over again, engage in this habit over and over again, and yet you find yourself that you cannot come out of it? So let's quickly look at it. We are looking at three things here. Number one, we look at how does it manifest. Number two, why is it problematic? Then number three, how to avoid FOMO. So let's jump into it. Number one, you see yourself jumping into stocks without, number one, asking questions. Without asking questions, why am I buying this stock? In one of the videos I made, I said, why are you buying these stocks? Is it to make money or to grow your money? When you answer that question, if you are yet to watch that video, kindly go and watch it, where I spoke about avoid these stocks. Avoid these stocks. That's the title, that's the thumbnail. Avoid these stocks, so you can go and watch it. So you jump into stocks without asking questions. Entry, you do not have any entry or exit plan. So you just jumped into it, whether it's just to gain 20%, it's just to gain 15%, it's just to gain 30%. You just jumped into it. Number three, no risk assessment. No risk assessment. Then you see yourself making impulse decision based on market hype. Anytime you see yourself making buying decision based on market hype, or even it could even be a selling decision. Maybe just because there is a fundamental, a news, just like what happened when the banking issue came up, when the CBN came up with a news, and eventually people started selling. And some people sold at a loss, which is not supposed to be. And eventually, the third day, there was a rebound. I remember somebody was asking in our WhatsApp group, what should I do? I said, this thing is temporary. Don't disturb yourself. They will always come out of it. And third day, the market rebound. So please, get it right. Then, Some claim to be momentum investor. Maybe you are always riding on that momentum. Once you hear that this stock is about to peak, the next thing you jump into it. It is good, but if it becomes an habit, eventually, later you may see yourself losing money. If you are a momentum investor, based on personal analysis, based on technical analysis, no problem. It is valid. We have momentum investors. I even do it at times. But the question is, have you done your own analysis that will say you want to ride on this momentum? Because even when you want to ride on momentum, you still have an entry and exit plan. You still have an entry and exit plan. That's it. That's what you need to know. So the question is, why is FOMO problematic? Why is it not good for you? Why should you back out of FOMO? Fear of missing out, jumping on stocks without asking questions, without risk assessment, without entry and exit plan. Number one, it increases your exposure to risk. It increases your exposure to losses. It increases your exposure to losses. Because at that point in time, you don't know whether you are buying at the top or you are buying at the mountain. You never can tell. Number two, emotional investing. Your emotion gets involved. The moment you do not ask the right questions before you make informed decision, you are getting your emotions involved in that investment. Number three, you are buying. You may see yourself buying high and selling low instead of buying low and selling high. So the question is, how do you avoid FOMO? How do you avoid FOMO? Number one, have an investing plan. For instance, have an investing plan. You may do what we call DCA or NCA. DCA simply means dollar cost averaging. NCA simply means naira cost averaging. So you can do any of the two. If you are investing in Nigerian stocks, for instance, you can do naira cost averaging, which means have a plan. I want to be investing 10,000 naira monthly. I want to be investing 500,000 naira monthly. Have a plan. So even when you are being told about a particular stock, except you have free money to play with. But aside from that, just like I said, once it becomes an habit and you are winning, you are winning. The day you are going to lose, that loss may be colossal. It may be something you may not be able to recover from. I hope you get my point. So have an investment plan. So if it is US stocks, for instance, do what we call dollar cost averaging. If it is $50 per month, if it is $100 per month, it is a gradual thing. You are doing it consistently and eventually it piles up. That's the way you invest. You are not a gambler. You are not a gambler, you are an investor. Practice patience. Practice patience. Even if there is an hype, still do your analysis. For instance, in the Nigerian stock, the maximum a stock can gain is 10% in a day. The maximum it can gain in a day is 10%. So at best, it will gain 10% on that day. And once you have done your own basic analysis, then you can decide to enter. You can decide to enter the market. I hope you understand. So do practice patience. Manage your emotions. Learn to manage your emotions. Please, learn to manage your emotions. Then avoid greed. It is not every stock you buy. Learn this. Know this and know peace. It is not every stock you buy. It will always be as if you should buy every stock. But eventually you see that your portfolio is too lean. It's too lean. For instance, there's a particular stock that is promising that you should have invested 100,000 naira in, but just because you wanted to be everywhere, instead of putting 100,000 naira in that stock, you went and put 10,000 naira, and that stock now has done over 400%. Has done over 400%. Some people will be regretting that now. Maybe as at when they bought better glass at the early part of this year, they were supposed to, they had that 100,000 naira to put in that particular stock. Well, I teach diversification, but you see that their portfolio is too lean. Eventually, what happens? Instead of having quality stocks, they just have many stocks and small percentage. Small percentage. So just imagine somebody who should have invested 100,000 naira in that particular stock, now just because they wanted to get many penny stocks, went invested 10,000 naira in this, 10,000 naira in that, 10,000 naira in this. For instance, let me cite an example. If you have 100,000 naira, for instance, and you want to invest in stocks, it is better you pick, let's say, 4 or 5 stocks than saying you want to pick 10 stocks. 4 or 5 is okay. If possible, do 3. ask questions, do your analysis, do 3 that you know that these stocks they are promising, and go into it. Maximum 5. But having 100,000 naira and investing the 100,000 naira in 10 stocks shows that you are not even sure. You are just taking stock recommendation, and that's why it is imperative you learn at least the basic analysis. I hope you understand. So let's move on. Focus on long term. Focus on long term. A major reason for investing is for passive income. Your work, your job, your business is what should give you active income. So this is majorly for the future. You use it to grow your money. That's what you use this for. I hope you get it. Consider risk to reward ratio. What is the risk involved? If it is a penny stock, the risk is much. If the volatility is high, the risk is high as well. I hope you understand. So just get this basic information, basic analysis, and neglect fear of missing out. It's not going to leave you once, but at least have a mindset that you are not going to get into this habit of having to jump into stocks. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so that you can be notified whenever we release a new video. Till we meet in our next video, stay blessed.